Ladies and gentlemen, welcome to Wealth Done with me, your host, Noble PM. In today's episode, we're going to talk about gravity. So here are the top topics of the day. Is the China trade over? We're going to talk about why is oil falling and why we had yesterday a big drop in the market and today we're recovering. So if you're a fan of the market, then please hit that like button and also subscribe to the channel and click that notification bell in order to get notified when we post new videos like this. With this being said, let's first of all check the market vitals. We're going to start up with today's economic events, which were from Australia. We had the business confidence and RBA minutes. Then we also had Westpac consumer confidence changes. From China, we had the National Development and Reform Commission. And then from Canada, we have the balance of trade. Now, looking forward on tomorrow, we're going to have the balance of trade for Germany. And from the United States, we're going to have the FOMC minutes. Yesterday, we had a really red day in the market, but today the S&P 500 opens up really strong, though having a big drawdown yesterday. It's recovering. Also, the Nasdaq is starting the day in green, having a very nice candle there. And the Dow Jones is sadly lagging back with a red candle, starting the day out in the red, of course. Taking a look at commodities, we have everything in the red. This could change, but momentarily, oil, and where we also are going to talk about oil is down more than 4% on the day, having a massive drop after its immense over 1.5 week rally. Gold is down, silver is down, and also copper is down. Looking at the dollar, it is weakening and it is strengthening against the Japanese yen. Looking at cryptocurrencies, Bitcoin and Ethereum are in the positive. Let's take a look at earnings. We had Pepsi reported earnings as the first big company. They reported a better than expected EPS, but they beat on EPS, but they sadly missed on revenue, being down 2.88%, but they're up in the market over 1.38% today. Sadly, they did guide it a bit lower, and in the report, PepsiCo guided that it is now expected to end the year in a low single-digit increase in organic revenue growth, below the previously expected 4% growth. So next up, let's talk about China and let's talk about the China trade. Is it over or is it just starting? Now, the Hang Seng had one of its worst days today, opening up with almost minus 9%. Actually, it's over 9% currently, after the Chinese government has fired up investors by encouraging banks to lend more to buyers of stocks, basically companies that are buying back stocks, and real estate, but officials refrained on Tuesday from promising more stimulus. Consequently, the Hang Seng index fell over 9%, going down in the low 2000s, under 21,000. Gravity is, of course, pulling down on the Hang Seng, and if it breaks the 20,000, then the next support will be standing at 18,000. And if that index falls, then we're going to see we could see a more deeper downfall triggered for the Hang Seng. Now, this could also be seen in big stocks like Alibaba, which is down over 6% on the day. Although I did mention Alibaba in my previous trades, where we did take profits early on in Alibaba, right around before it surpassed its regular RSI, meaning relative strength index. And I did mention that you should take profits because gravity will act on Alibaba and it will pull it. Now, with the top Chinese companies like Alibaba falling, it's only a matter of time before they all fall and come back to reality that China is not doing that well. But truth be told, the Chinese market was massively overbought and a good pullback was expected. Now, the Chinese market is still looking dangerous, so please be careful. Although this pullback looks like a potential buy, I would wait until we see a good enough pullback, also some confirmation. So let's jump to the next topic, and that would be, why is oil falling? Now, oil prices are falling today, with WTI crude oil down 4.85% and Brent crude also down in a 4.8% barrage. Crude oil futures dropped 4% on Tuesday as the rally driven by the heightened geopolitical tension risk paused momentarily, with the markets awaiting Israel's potential retaliation against Iran. Now, we had a very good comment from Thomas Varga, which is an analyst on the brokerage PVM. Now, he said that, and I quote, "Oil can keep escalating only so far, purely based on perceptions and not on actual supply disruption." And if you do remember, or if you watched the yesterday episode of Wealth Dump, you may remember that almost these were my words, that there is no demand for oil that is driving the price, is only speculative. So there we go, one of the great analysts also confirming what I thought, that this is purely speculative driven. Now oil prices had surged approximately 13% by Monday close after Iran fired around 180 ballistic missiles at Israel last week. This sparked fears of Israel retaliating in targets areas like Iran's oil fields, which could press down oil to higher prices. However, President Biden has publicly advised Israel against striking Iran oil infrastructure. Now, please do understand that the oil infrastructure that Iran has is basically going mostly to China. So the only reason why President Biden would pressure Israel on holding back and not attacking oil fields is because they fear a broadening of the war, the conflict. It's not a war yet, it's just a small conflict. And actually at that 180 missile strike, nobody died except one person, and he was hit by debris, not a direct hit by a rocket. Also, the Jerusalem Post reported that Israel is expected to focus on military and intelligence facilities only. Now, I will await the outcome of the situation, and only then will I make my last trades on my oil positions. And of course, I'm going to keep you updated with those, as always, on Substack. So definitely follow me on Substack if you want to see those trades. And last but not least, a really short mention about the current state of the market. We are in a very, very volatile environment where we have presidential elections coming up. Also, take a look at my video from the weekend where I did assess the risk for the market, and I did mention there that the risk is high and we are due for a pullback. Yesterday we did have a little bit of pullback, but nothing substantial. It wasn't even a 1%. Sometime in the day it was 1.6%, but it then dropped back to 0.9% on the S&P. So this is not a major pullback that we had, and we could see more volatility heading into the election. Also, earnings are coming back, and somewhere in the next week we may see the bottom for October, preparing us for the Santa Claus rally. But until then, we could see a lot of chop, especially through the month of October till the middle of November, somewhere there, where we are going to also be in the middle of earnings season and then slowly closing up earnings, with then stock buybacks coming back from all companies. So hope you enjoyed this episode. Please give me a thumbs up. We are a growing channel. I really appreciate the love. My name is NovaBM, and if you like this kind of content, definitely subscribe to the channel. Also click the notification bell in order to get notified. We post from Mondays to Fridays, and then on Saturdays or Sundays we do our portfolio review where we reveal everything that we bought and we sold. So thank you so much for watching. Catch you next time. Take care. Bye bye.